In a surprising twist to global trade tensions, India has officially rejected American corn imports, dealing a major blow to U.S. farmers already struggling with falling demand and rising costs. Once seen as a potential growth market for American agriculture, India has now turned to domestic production and alternative suppliers, citing self-reliance and changing global trade dynamics. For Washington, this marks yet another setback as trade wars spread beyond technology and manufacturing into critical agricultural sectors. Experts warn the move could destabilize global corn markets, push prices higher, and intensify economic friction between two of the world's largest democracies. The big question now, is this the start of a long-term shift in India's trade policy? India's Ministry of Commerce shocked global markets this week by announcing that the country will no longer import American corn, citing a combination of self-sufficiency goals, rising trade tensions, and biosecurity concerns. The decision comes as part of Prime Minister Narendra Modi's broader push for Atmanirbhar Bharat, or Self-Reliant India, an initiative designed to reduce dependence on foreign agricultural products and boost local farming incomes. For American corn exporters, this is a major setback. The U.S. had been counting on India's growing population and expanding livestock industry to drive long-term demand for American grain. Last year alone, India imported nearly $500 million worth of U.S. corn, much of it used for animal feed and food processing. With this new policy, those imports will now drop to zero, cutting off a lucrative market for American farmers already struggling with low prices and shrinking global demand. Indian officials insist the decision is based on economics rather than politics, pointing to record domestic corn harvests and the need to protect local farmers from cheap imports. However, trade analysts argue that rising U.S.-India tensions over tariffs and agricultural subsidies likely played a role in the timing of the announcement. The immediate reaction from U.S. farming groups has been one of frustration and concern. Corn growers in states like Iowa, Illinois, and Nebraska, already hurt by reduced exports to China and Mexico, now face the loss of another major market. Some industry leaders warn that unless Washington negotiates new trade terms with India quickly, American farmers could see prices fall even further, worsening an already fragile agricultural economy. The decision by India to halt U.S. corn imports didn't come out of nowhere. It follows years of simmering trade friction between Washington and New Delhi over agricultural products, tariffs, and market access. Under the Trump administration, the United States ended India's preferential trade status under the Generalized System of Preferences, GSP, citing trade barriers on American goods. India retaliated by imposing higher tariffs on several U.S. products, including almonds, apples, and certain agricultural commodities. Corn imports were spared at first, but tensions kept rising as both sides accused each other of unfair trade practices. Agriculture became a key flashpoint. American farmers have long pushed for India to open its markets more fully to U.S. products, while Indian officials argue that cheap imports hurt local farmers and threaten rural livelihoods. The Modi government, with its Make in India and Atmanirbhar Bharat initiatives, has emphasized self-reliance in food production as a strategic goal. Meanwhile, global trade dynamics have shifted dramatically. The U.S.-China trade war disrupted supply chains, while COVID-19 exposed vulnerabilities in food security and import dependency worldwide. India, like many countries, began reassessing its reliance on foreign suppliers. The rejection of U.S. corn imports now appears to be part of a broader realignment of India's trade policy, prioritizing domestic farmers and diversified import sources over dependence on any single country, including the United States. The economic impact of India's decision to halt U.S. corn imports will be felt on both sides of the globe. For American farmers, this is a major blow at a time when they are already struggling with low commodity prices, rising input costs, and declining exports to key markets like China and Mexico. India had emerged as a growing destination for U.S. corn shipments, and its sudden exit removes a critical source of demand that helped stabilize prices in recent years. Industry experts warn that without India's purchases, U.S. corn stocks could pile up, putting downward pressure on prices and farm incomes across states like Iowa, Illinois, and Nebraska. Rural economies heavily dependent on agriculture may feel the squeeze, with ripple effects on equipment manufacturers, transport companies, and grain storage facilities. Politically, the move adds another layer of tension to U.S. India relations. Washington has long pushed for better market access for American agricultural products, framing it as essential for balancing the trade relationship between the two countries. New Delhi, however, views agricultural self-sufficiency as non-negotiable, especially with millions of Indian farmers relying on government support and protection from cheap imports to survive. Analysts believe the rejection of U.S. corn could complicate ongoing trade negotiations aimed at strengthening economic ties between the two democracies. Instead of progress, the two sides now face yet another trade dispute, this time in the politically sensitive agricultural sector, which holds significant weight in both economies. India's decision to cut off U.S. corn imports has sent ripples across the global agricultural market, triggering swift reactions from competitors and trade partners alike. Brazil, already a powerhouse in global corn exports, is expected to be the biggest winner. Brazilian exporters have been aggressively expanding their presence in Asia, and India's move opens the door for them to capture a larger share of the Indian market. Argentina and Ukraine, two other major corn suppliers, are also eyeing opportunities. Both nations have recently increased production capacity and are looking to diversify export destinations amid rising global demand for animal feed and biofuel production. China, interestingly, is watching the situation closely. While Beijing has had its own trade tensions with Washington, it remains one of the largest importers of U.S. agricultural products, including corn. If India successfully shifts to alternative suppliers without major price shocks, China might explore similar strategies to reduce dependence on U.S. crops, further reshaping global trade patterns. Meanwhile, international trade organizations have expressed concern that the U.S.-India dispute could fuel broader protectionist trends in agricultural markets. The World Trade Organization, WTO, has warned that escalating trade barriers risk distorting global prices and destabilizing food security in developing nations. In financial markets, corn futures have shown increased volatility since India's announcement, reflecting uncertainty over how global supply chains will adjust. As exporters rush to fill the gap left by the U.S., farmers in South America and Eastern Europe stand to gain, while American producers brace for intensified competition abroad. Looking ahead, the rejection of U.S. corn imports by India could become a turning point in U.S.-India trade relations. Both sides now face growing pressure to return to the negotiating table, but analysts warn that reaching an agreement won't be easy. For Washington, securing agricultural export markets has been a top priority, especially as U.S. farmers grapple with declining prices and rising competition from countries like Brazil and Argentina. American negotiators are likely to push for tariff reductions and guaranteed market access in future trade talks with India. However, India's government remains committed to its Atmanirbhar Bharat, or self-reliant India agenda, emphasizing domestic food security and farmer protection over trade liberalization. Political timing could also complicate matters. With elections approaching in both countries within the next 2 years, leaders may be reluctant to make concessions that risk upsetting powerful constituencies, farmers in India, and trade unions in the U.S. Some experts suggest a limited trade deal focused on agriculture could break the deadlock, offering incentives like technology transfers, crop insurance partnerships, or biofuel investments to balance interests on both sides. Others argue that without broader trade reforms, tensions will continue to flare across multiple sectors, from agriculture and manufacturing to digital services and energy. Either way, India's decision signals a shift toward diversified sourcing and domestic production, raising doubts about whether U.S. exporters can reclaim lost ground quickly, or at all, in one of the world's fastest-growing food markets.